demand line would tell me I'm wrong. So therefore, there's no way I can ever call this a benchmark process. I could obviously try and figure out which one of these two lines is right by adding in things like yields, by adding in things like order flow, and that involves obviously going down the road of working into another phase of analysis. And through that other phase of analysis, we can then see whether we like the idea of buying the lows or selling the highs. But that's a different phase of analysis. We've got on the face of it that idea of the value that we can see being bullish or bearish, but underneath the surface, there's other peddling ideas. It could be a fundamental driver, it could be a macro driver, it could be a dollar, a completely different driver, it could be yields, it could be real yields, it could be something completely different. But under the surface, these things like OPEC, well, you don't see OPEC on the chart per se, do you? So you're understanding that on occasions there's going to be a new driver. And if there's going to be a new driver, then of course you want to be just mindful of the fact that we don't have a storyline to lean against, and that's okay. We can work around that. You can see that the stack is very, very bullish there for the S&P. We have driven a new swing high there. That's quite nice. That's worked out quite nice into that as a storyline. I like it. I like it a little bit. So you can see with the oil, you can see in terms of the delta story. Take a look. So we can see it seems as if it's a fresh air top line, doesn't it? Fresh air top line. The book's offered, the volume delta's offered, and the tick's offered. The tick isn't as offered as the delta is, suggesting that it is a top line sell. Because obviously it's going to have to be a top line sell, because that's what we call a fresh air trade. So you can see that there's a fresh air trade coming in, but what else is interesting? Well, it's near the prior swing. What else is interesting? It's near the $82.50. What else is interesting? It's also the day's VWAP. So it's not just about one piece of information, is it? It's about several pieces. Now we know that the dollar against supply demand is more important than the oil against supply and demand is more important than the oil against the dollar. Yes? We know that as a fact. So the dollar can be bullish and oil can still go higher. It's just one of those things that can happen. It's not as likely to go higher faster, but it can still go higher. So in other words, with the dollar well offered at the moment, it'd be easier to buy this. But because there's supply coming in, it means that into top edges, there's more likelihood to be a short seller coming in into these top edge tests. So obviously when we recognize that there's an exhaustion sell or, for example, a massive delta getting absorbed, you can start thinking that the edge is starting to adjust slightly in favor of the short sell. If you still don't like the dollar, then the decision at that stage is to do what? Nothing. You just decide not to do anything with it then. I've decided not to do anything with it. Was I right in hindsight? No, because it'd have been better if I'd decided just to work those short sells. But that's wonderful in hindsight. I can't make any money looking backwards. I can only make money if I can see what I'm looking for on the right-hand side. Now, obviously, the dollar put me off getting the short sell, and that's absolutely fine by me, because if I look at it 10 times, I'll still make the same decision 10 times over. What I'm looking for is for these things to agree and then fit the order flow into the narrative. Because of that, I really like today's short on oil. I like that one bottom edge buy on oil, and I've liked nothing else since then. So when we look at the oil at the bottom edge, I like the idea of the bottom edge buy. I like this storyline because the dollar was going in the offer side, so the euro dollar was rising. The red line was coming up into that trade there. Sorry, it's moved, unfortunately. So that this was giving me the two elements at the same time. Now, that doesn't tell me whether the order flow is bullish or bearish at that point. And what I've got to do as a trader now is try and figure out whether the oil was bullish or bearish. Well, you can see in the background that the delta and the tick delta are a lot lower than they were before. The price was into a sweep. So in other words, it's not a passive buy limit order trade. It's a rotation trade, isn't it? It's not going to be a passive buy limit, because how can I be a passive buy limit into all that selling? So in other words, I've got to wait for the rotation and join in as the price rotates out of that area, and then go for the buy side reversal. And that buy side reversal was a perfect example of a perfect combination trade where everything lined up. Now, obviously, when everything lines up, it's called a benchmark. And this comes back to this benchmarking process, doesn't it? If you're only going to trade benchmarks, well, that's your business plan. Trade only benchmarks. Trade only when the value is good for the dollar and the supply line. Trade only those benchmarks. But that means you might get 1 or 2 trades in a day, perhaps. If you're more likely to want to trade a lot more than that, at some stage you've got to compromise those benchmarks, haven't you? At some stage you've got to balance up the probabilities and say, the market's red, using one of Kim's favorites. So the RGL's red, and the RGL's still red. So I'd still prefer to be short selling oil. So whilst the dollar might be offered, I don't really care. I am still going to work that benchmark short sell. Now, obviously, the one thing about the dollar that we can simply just try and advise is you can obviously add your yields. So obviously, if the dollar might well be bid, you can simply add the yield to the storyline and say, well, what else can I make of this? Is the yield telling me the dollar's going to stay bid? Or is it telling me the dollar's going to flip over? How am I going to be able to recognize the opportunity? So if I see that the dollar's maybe a little bit too offered, the euro's maybe a little bit too hot, then of course I can work into that short sale regardless of the dollar. But that takes a step up again, doesn't it? It takes another layer of analysis, because now you're not analyzing oil per se. You're actually analyzing the dollar, aren't you? Do you understand the difference? You're now analyzing the dollar. And obviously, if you're now analyzing the dollar, the important thing is the dollar going to stay bullish? Well, the only way you can understand that is to do an analysis of the dollar again, simply against the overall shape of yields. And if the overall shape of yields are coming down, then the probability is the dollar won't stay in that position. And that's your answer, right? So guess what happened? Well, let's take a quick goosey gander at it, and let's see what did happen. Okay, so we'll go back to the oil again. So this is oil against the dollar. Okay, so we can see that this is a very strong storyline, a very strong storyline for the bottom edge buys if all you're using is dollars, correct? Very strong storyline for bottom edge buys. Well, we got that buy trade. But when we traded up into the top edge, we can see fresh air, exhaustion up here. We can see this is all fresh air into these level 2s. But obviously, looking at it from a dollar perspective, you can see why it's why you wouldn't have sold it, of course. But let's now change it from the dollar, and let's now look at yields and see if there was a storyline on the dollar that could have given us that top edge short. So this is now yields. Was there a yield storyline to take you away from that dollar position? Now, I know it's not the carry trade, but it is yields. But was there a yield storyline to maybe take you away from that dollar weakness? So one of the things that we can start recognizing is that, the yield storyline is very, very important, right? We know if the yield storyline's coming down like this is obviously part and parcel of the bond trader saying, I think oil will now be selling top edges, just the same way as the bond desks thought oil would be bought into these bottom edges. And you can see the oil being bought into the bottom edge here, 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 and here. You just mark off those big volume candles, and you can see what the bond traders were expecting to see. Buyers into these very large volume narratives here and here and here and here. So we can see that, can't we? We can actually recognize the story evolving into the volumes. So when we see the storyline evolving into those volumes, in line with the yield rallying, which obviously is taking into account a rally in oil prices, a lot of people will be able to look at that and get an idea, a sense of the dollar storyline is not a yield storyline. Well, that's got to be something of interest, surely to goodness. So when we look at this as a storyline going forward, you can see obviously the yield storyline against oil has been basically completely not back to front, because you can see it's more an OPEC storyline. It hasn't been a yield storyline, has it? In other words, oil's been driven by fundamentals, not by technicals. And because oil's been driven by fundamentals, we can understand the impact that it has. Still, all the same, if oil's being driven by fundamentals, if the bond traders don't respond to that, you can see that there became what is quite clearly what is called an inflation hedge trade. So if that's not the most obvious inflation hedge trade you've ever seen, in other words, sell side oil, sell side bonds, I don't know what is. Because that's nuts, right? That is absolutely nuts in most cases. So if you go sell side oil and you sell this, well, you buy the black line, which is inverted yield, right? This is just bonds inverted. So if you sell the oil and you sell bonds, that is like the classic example of a simple inflation hedge trade. You just keep selling oil, selling bonds, selling oil, selling bonds, selling oil, selling bonds. The bond price moved and the oil price moved against that very massive inflation hedge narrative. And with that very massive inflation hedge narrative, you can see it starting to unwind. And once that inflation hedge narrative starts to unwind, then we go back to normal. Now the yield is starting to drop. Oil at top edges is starting to sell into it. There still seems to be a bit of inflation hedging going on, but we can start recognizing it. And when it goes into a negative correlation, it is a hedge trade. So when it's that negatively correlated, and it seems almost exactly a negative correlation during that rally phase, during this rally phase, that is an almost exact negative correlation. Well, we know that's an inflation hedge when it starts to turn back down, when it turns down. So we know when that turns down, this will probably start finding buyers at bottom edges here. In other words, sellers at top edges of bonds. I'm going to touch a little bit on this process, not that necessarily the bond process, but we're going to touch a little bit in this process in this afternoon's classroom about the ideas of using indicators to try and assess price, but also to try and assess value as well. We're going to touch on that in classroom today, guys. A classroom, by the way, is still an hour away. We're only just into the cash open. We're just out of the initial balance. That sell on the S&P was working beautifully. Did anybody decide to play it off the 24s? That was a cracking little short sell. Did everybody get it? Did everybody get a piece? Cracking short sell into the 24s. It did pin through the area, of course, as a 5-minute chart. But of course, as we started to drill down into the 1-minute chart, you'll see actually the developing storyline into that storyline there. You can see that you don't really want to sell it on the up candle. You want to wait till the seller comes in and then start drawing in some lines. If you're a retail trader, you want to draw in some lines, because what that means is you're now going to start looking at these higher prices here to start working into that short sell. And obviously you can see that there was many opportunities, a sell here, a sell here, a sell here, and a sell here. And what a lovely short sell it's came out to be. Very, very nice. Very nice indeed. And 26s down to 16s. Beautiful little sweep lower in terms of the real yield, in terms of the real economy, in terms of the sentiment trade. I like the short sell. It seemed to make a lot of sense. And obviously, well, it looks as if we should be testing 45 handle, shouldn't it? So obviously we're halfway down this process. We've got a bottom edge here at 04s. So you'd imagine that this at the moment looks dangerous for a break of the 45 handle at the bottom edge. Yeah. So a good trade. Well done, anybody that's on it. It's going to balance, of course, one would imagine here. So a spring trade off the 18s to 20s might be a good play. We could expect to maybe see that type of thing developing there off the 18s to 20s. And a press down into 45 would obviously be the next potential play if that spring develops. We got another low price on bonds. I don't know if anybody decided to join me this time on bonds. We bought the last time off the 16, 17s. We actually got a bigger discount this time at 14s. The value was still good. Did anybody get the discount price on bonds? So you can see that we swept the 16s. We actually had as much value as we had the last time. In fact, a little bit more value. And that little sweep was absolutely beautiful. Absolutely beautiful. And obviously picking up those longs off of the 15s and 14s. It's traded 22s now, so we're in good shape on that trade so far. Obviously, all you want to do there is bag and tag some monies since the value started to drift off the top edges there. So bag and tag some monies on this candle. It's obviously a long trade, long side only. I mean, there's no way we can sell this, right? There is no way we can sell this. So, I'm expecting this to be trading 128s. So that's obviously something we can pay attention to. Now, if this is going to trade 128s, what does that mean in terms of the sentiment? Well, that would suggest that the Nasdaq should outperform the S&P in due course, right? So that's something that as a S&P trader we should be obviously looking for, is that sentiment trade starting to turn back round in favor of the long-sided bid. Now, that's assuming the value in this stays bullish. However, you can see on this retest, again, you can see that the value is just dropping off again here. And again, it's obviously time to bag and tag these top line prices. Disappointed? Sure. Still a buy on dips? Sure. Looking good? Yeah, it's all right. So what, mate? So what, mate? Yeah, I was disappointed that that crack spread didn't give us a trigger on that uptick, because that would have been nice. It has dropped off. 36.10, it's dropped down to 35.70s for 400 since we gave Paul a shout. And that would have been nice. Very nice indeed, but it wasn't ours. And it is what it is. Sell side gold. Did anybody like that trade? Now, we'd obviously just exited at 75s. We're into that RGL top line. We showed you that 76.60s earlier. And we obviously called a $600, $700, $800 upside. But since then, the value's obviously collapsed into a sell. You might well have liked it. There was a little sell off the 76s. It's now trading 71s for a $500 short sell. So congratulations if you're on it. Congratulations, I like your style.